For this week's Editor's Cut, we are unpacking OpenAI's fundraising ambitions, which in a new round could total up to an additional $100 billion at a $750 billion pre-money valuation. It is a big feat, even for Sam Altman and the OpenAI fundraising machine. But to break down where this money could come from, I want to bring on our co-executive editor, Amir Efrati, and our managing editor, Laura Mandaro. Welcome to you both. It's great to see you.
Hey,
Hey,
guys.
guys.
Okay, so Laura, I want to start with you because you are wearing Christmas colors. So I want to understand where you think the $100 billion could conceivably come from, of all the options that Sam Altman has open to him.
Well, as Katie and Miles, two of our finance reporters, wrote yesterday in Dealmaker, it could be sort of a smorgasbord. Obviously, I think financial investors will want to get in, and these could range from venture capital firms that have already invested. Sequoia is Andreessen. We don't know these names, but these are some of their past investors. The crossover funds like Dragoneer, as well as the big mutual funds that tend to invest in late stage companies. However, maybe that's 10 billion. So how do you get to 100 billion? There have already been big strategic investments in OpenAI, such as Amazon, it's expected, and so we could see some of these cloud providers also putting in equity, as they have for some of the other model makers. And then there's a third bucket, which are these very big sovereign wealth funds. Is it MGX, which is a UAE fund? We've reported that they've talked to Saudi Arabia's PIF, Public Investment Fund, which is a huge fund. We don't think that they've invested. So, there are options, but it's still a colossal number.
Okay, so Amir, like Laura said, there are a lot of options. I'm curious what you're hearing in terms of which of these options is actually the most likely to maybe start the round. We saw the news with Amazon. Gosh, hyperscalers. What do you think?
Yeah, I mean, you do have situations in Silicon Valley where late stage private firms start to tap public market investors, right? The Fidelities of the world, the kind of funds that manage largely public stocks, but they do get in earlier sometimes. Sometimes it's great, sometimes it's not, and they come in at a crazy high valuation. I think a bunch of those kind of folks piled into like Instacart, when it was overvalued before it went public. So there are pluses and minuses to that, but there is that kind of capital around. It's essentially like almost like going public without going public. Raising that amount of money. I think it's interesting that in 2023, when this kind of train really got rolling, Sam Altman told his staff, this is going to be the most capital intensive business of all time. And we may even raise $100 billion, in this process from outside investors. And at the time, that was like, I remember writing that down. I was like, okay, wow, I don't know what to say about that. They are already 60% of the way there, assuming this 22.5 million from SoftBank gets in before the end of this year as part of an older round. So they're already more than halfway there to 100 billion before talking about this next 100 billion. But I would say that the reaction we've gotten is one of a lot of confusion. People are basically asking, okay, they had a year in which they raised $40 billion. Why do they need to raise 100 billion right now or
Right.
in the next few months? Like, what's the rush? Like, why can't they do this in increments? So this is almost a bit of a trial balloon, if you will. These kind of rounds. There's a lot of like emotion and momentum and all these really interesting factors. But on the fundamentals, it's not as if this company is crazily valued. I mean, they have plenty of revenue. They're growing extremely quickly. The multiple on revenue that they would be getting in this round is not insane if you
Right.
look at the revenue that they currently have and their growth rate. And the fact that, if they stopped all research spending, they could actually turn a profit somehow. It would be tough, but they could do it. So yeah, it's not insane.
So let me ask you this, Laura, in terms of what this money is going to, there's obviously the research spending. And I mean, part of that is the people, hiring the people. But look, it's building the data centers, it's getting your hands on the chips. I mean, look, the age old adage, debt is cheaper than equity. Maybe it's a silly question, but is debt not an option here? Why do they have to go equity here?
It's a good question. I mean, they do have some debt, I mean, they are far from profitable. So they have revenue, they don't have cash flow. They're burning cash, so that's not exactly the best means of borrowing, or the best conditions for borrowing. I mean, do they borrow against something? They don't own these chips, or maybe they own some, but that's not, they're renting the chips. So I mean, I think it's a very good question for any private startup that's burning a tons of cash. Can you get debt? And I think there's some problems there, right? That I've just listed. Um, and equity has been very forthcoming. I mean, we've seen a lot of clearly very huge funding rounds, but I think one constant has been that all of these companies have seemingly been able to raise, and they just a year ago, the valuation was at 160 billion, and we were writing, wow, I can't, this is crazy, right? And now we're talking about 750, or over 800 if you include the money. So if there's a sign of pullback, it's not very apparent for the largest companies, and their growth is rising very quickly. We had a good chart in a story on Sunday about how fast Anthropic and OpenAI's revenue has grown. I mean, is it tripling in a year, up 8 times? I mean, this is what you'd want to see, I think, as an investor. And I think, like Amir said, there are very big pools of capital out there. They have already raised money from mutual funds, the T Rose and Fidelity, but there are many more out there, and I don't know. I mean, in your answer to your question about what they need the money for, I think that is the most interesting part of this conversation, because there's really been no upper limit to how Sam Altman has envisioned this company and what it gets into and the partnerships it makes. So does it go beyond? I mean, they're already kind of working with SoftBank about setting up their own data centers that are not going through the cloud companies, but are going to be accessing
Right.
chips. Do they, push that verticalization even further? We've reported that they're, working on maybe designing their chips, or do they tap some energy source? I think that's what's going to be fun for our team to report on in the new year.
Amir, let me ask you this. Is there any historical parallel here for a single company raising this much money? And are there any broader systemic risks to the venture capital ecosystem, to so many people pouring into one company, other than the obvious risk, which is that you're not exactly diversified? But, can you think of there being any parallel here?
Nope. We're in uncharted territory for sure. The thing I would say, though, is that
Well,
so many
that's a good segment. Maybe we'll just call it there.
well, a lot of firms have already made plenty of paper gains on this entity, and it has done a good job of, depending on which side of it you're on, um, of allowing shareholders to sell shares. So there has been quite a lot of liquidity. I can't remember if they're like at 11 billion or 12 billion of money that has gone out or sold, shares that have been sold in the last few years alone, which is pretty incredible. So yeah, there have been enormous gains already. I think the only risk is for the firms that come in at this kind of valuation, and how much more can this thing go. I think clearly ChatGPT is under monetized. And so one of the stories we haven't talked about is one that ran this morning on the ads push.
Right,
Maybe you're
right.
interviewing other
We're-
colleagues about that soon. That's a massive push, and it's going to be monetize, and there's plenty of runway for that, even if the subscription business kind of slows down in the next year. So I don't know. I just from a purely fundamentals perspective, it's not crazy. They obviously have the most unprecedented amount of spending plans that we've ever seen in history. I think the public equities don't believe that that is real. They don't believe that OpenAI can actually fulfill its obligations. Raising tremendous amount of additional capital, I think, will help in that regard. So yeah, I can't remember what the original question was, but
Well, the original question was just, is there any parallel? And the answer was no. And so,
I
but
mean,
it,
yeah, Uber is the only one that I can remember where they were raising at the time unprecedented amounts of venture capital, and they were burning a lot of money, and there was a ton of skepticism about whether they could ever make money. And if you did squint and look at the financials, you could say something similar, which is that if they stopped throwing cash around to create marketplaces and to pay to pay drivers the amounts they were paying to subsidize rides the way they were, then they could actually make a profit. A lot of people actually doubted that, but it was true. And so that's the only kind of historical example that I think about in this moment.
And it
great.
did happen. It just took a while. I mean,
Well,
that's
certainly, I know they. I mean, they went public, and now we're at a point. I remember Uber turned a profit. The whole stock market went. Look what happened.
I mean,
So
with OpenAI, it's not, the projections we've reported on are you can see the path to cash flow in a couple of years. I think the question is, do they test the public markets before that's actually really happened? And it could. I mean, we've seen big tech companies go public before they're profitable. Everybody points to Amazon, and certainly some are still not profitable in public. So it just doesn't seem that crazy to think of. It's just that the scale of these, the spending and, the cash burn is quite high.
right. Well, it is certainly an interesting story to see how it plays out. I'm looking forward to more reporting from both of your teams on the topic. I want to thank you for coming on. That is Laura Mandaro, our managing editor, and Amir Efrati, our co executive editor here at The Information.